the first question that I really want, you've been around for a very long time, very well respected, and I really appreciate you being here. But I have to ask you, you've lived through a lot of financial cycles. Does this one seem similar to ones you've had in the past, or how might this be different?
If you give me the word use of the word similar, then
Well,
yes. Uh,
okay.
it, it
Similar
reminds it
chaos.
reminds me the most of the 1970s
Yes.
in the sense that we're coming off 20 or 30 years of fairly benign economic climate. I'm not suggesting, by the way, that World War II was benign, but the post-World War II period from 1945 uh, to 1970 was really fairly benign. US dollar hegemony, declining interest rates, strong economic growth. And underlying that was an investment focus on industries that were non extractive. The growth of the United States is an example.
Hmm.
So the Nifty 50 is an example in the 60s attracted a lot of investment attention. There was not a lot of investment attention paid to underlying materials. Well, the use of those underlying materials was growing. There was a coiled spring aspect to it. At the same time, the economic climate in the late 40s and the 50s, in fact, most of the 60s, was so benign that people forgot to be afraid. They forgot to understand what was happening to the federal budget, what was happening to tax rates, uh, what was happening to underlying wage and cost explosion. And that all came to a head in 1970. I think that's very similar to the
Hmm.
circumstance that we face today, Lynette. If you look back at the period 1982 to 2022, uh, I suspect that when history is written, that will be the most benign investing epoch in human history.
It's kind of interesting that you say that, and then also, like you said that they weren't really paying attention to the underlying materials. Are you talking about like commodities like
Yes,
lumber and
yes, absolutely. Absolutely. Our society had been underinvesting in productive capacity around raw materials literally since the Depression. We used a ton in World War II,
mhm,
came
mhm.
out of World War II unconstrained. We were more worried about a depression or a recession than we were about economic growth. And the consequence of that is that we underinvested in productive capacity, even as we were using up our developed resources. Very
Interesting.
similar to
It,
today.
well, you also I agree with you 100%, and there were things that are happening then and things that are happening now, but the other thing was a lot of distraction in the 70s and the 60s and the 70s. So was it the distraction that you think maybe caught? I mean, I can't even say because I was there. I was born in 54.
Yep.
So I remember that period, really well, and the Vietnam War and all of the I mean, there was chaos, the women's lib movement, civil rights movement, oil embargo.
I'm less active, less, pardon me, less capable of commenting on the sort of zeitgeist, the sociology.
Ah,
Uh, I don't know how to dress myself. I don't own a TV, so in terms of all that, I'll rely on you to fill in the blanks of my testimony.
mm-hmm.
Uh, I can just say that we underinvested in productive capacity at the same time that demand increased, and we ignored the increase in underlying supplies. The the place where this market maybe resembles a different bull market in commodities has to do with the market that we experienced 2000 to 2010. And there, I think the wild card really was the urbanization of China,
Hmm.
the realization of Deng Xiaoping's statement to become rich is glorious. I say we because it's a triumph for humankind. We incorporated 500 million impoverished rural Chinese into middle class existence.
Hmm.
And we generated a tremendous demand for resources competition from a people who hadn't competed with us before because they were too poor. Uh, we have done, I think, as a species, a tremendous job in the last 40 years of raising the poorest of the poor from being desperately poor to being merely poor. Uh, and it's my belief that we finish the job in the next 20 or 25 years. There are a billion people on Earth who have no access to primary electricity. And I think they're going to get it in the next 20 years. That's going to generate tremendous demand for energy of all sources, but tremendous demand too for things like copper and all of the things that go into enabling people to enjoy the life that you and I live. So I think the 10 years that are in front of us incorporates the circumstance that confronted us in the 70s, persistently high inflation,
Hmm.
but also increasing demand for commodities in the face of declining supplies of commodities. And that gets exacerbated by the introduction of a billion uh, extraordinarily poor consumers coming into the market and becoming increasingly wealthier. Um, a pretty interesting circumstance, one fraught with risk, of course. Inflation is a bad
Hmm.
circumstance in anybody's mind. And the people in the West who aren't prepared to deal with a billion new competitors for the stuff of life will not like the diminution in their living standards that comes from having to compete with a billion people. But making a billion people less poor is a good thing.
Well, I do agree with that. Um, although like the 70s, we are transitioning into a different, well, I don't brand new, but a different monetary system. Do you think
You are
that's going
correct.
to go super easy, or,
No,
what
I
do
think
you
it's
see there? Because that's the
I
same thing.
I think it's going to be a mess, Lynette. I mean, a mess. I don't know how we deal with it because, again, I don't own a TV. I can just give you the arithmetic of the problem. In this country, which I still maintain is the most dynamic culture on the planet, but in this country, hold on, let me second, let me kill this. In this country, the numbers around our money are staggeringly bad. The
Yes.
on balance sheet liabilities of the US government are at 38, almost $39 trillion. When people hear a trillion, their eyes glaze over,
Hmm. Hmm.
but it's a real number. Much more challenging to me is, and I'd be interested in your listeners' response, the off balance sheet liabilities.
Yes.
According to the Congressional Budget Office, the net present value of unfunded entitlement promises, net present value, not the nominal value, exceeds $120 trillion. Now you add those two numbers together, 39 trillion and 120 trillion, you get a fairly ugly number, 159 trillion. That number is relevant when you put it in the context of the Internal Revenue Service estimate of the private net worth of all Americans combined,
Hmm.
which is $167 trillion. We're worth 167 and we owe 159 at the federal level alone. It gets worse, of course. The off balance sheet liabilities of the US government are estimated by the Congressional Budget Office to be increasing at between 2 and $3 trillion a year.
Hmm.
And the on balance sheet liabilities are increasing by about $2 trillion
Hmm.
a year. I mean, something's got to give. The math don't math.
No.
Now, what we could do is we could do what the Argentines used to do. We could have an honest default. We could say to the bondholders, too bad, so sad, no money, strong letter to follow. And we could say to old folks like you and me, yeah, we know you paid into Social Security for 60 years, but there's no dough left, so you aren't getting any. That would be the honest thing to do, but that's not the American way.
True.
What I think we do is we honor the nominal value of our obligations and we inflate away the net present value of our obligations,
Yep.
which is what we did in the 70s. We didn't index taxation to an accurate measure of inflation. Yeah, you got it. You got it. In the decade of the '70s, Lynette, and you've probably already discussed this with your listeners. In the decade of the '70s, according to the Office of Management and Budget, not some cranky old libertarian, the US dollar lost 75% of its purchasing power. We did this before.
Yes.
Not coincidentally, the gold price went up, what, 26, 27-fold?
Mhm.
This isn't to suggest that the gold price goes up 26-fold from here, by the way. But I would suggest to you that it will take a 75% devaluation in the purchasing power of the dollar to make our nominal obligation serviceable. You'll get through it fine. You add value. I'll get through it fine. I add value. A pensioner on a fixed income
Yeah.
who is spending $4,000 a month today needs to know that he or she will need to make $16,000 a month 10 years from now to sustain the same standard of living that $4,000 sustains today. And that's a truly ugly number.
Yeah. Well, there's something else that, and I hadn't really ever thought of it this way. So this is a reasonably new thought process that I was going through because, of course, being American, you don't really want to think that our government would do an overt confiscation, certainly of our wealth. And they certainly have in this country many times, but the last time was 1971 when Nixon defaulted on Bretton
Right.
Woods. So all of those governments whose gold that we were holding with the promise to convert the dollars into them and they could take it back, nobody ever says that's a confiscation, but every country has a gold revaluation account. The US is not alone in the unpayable level of debt or promises. And there's no way to even know unless you might have a way, but I haven't figured out how to know how many derivatives are against all of this stuff and what's really happening in that market after 15 years of ZERP. But I'm convinced, and you say what however you think anyway, you're going to anyway, which you should. But I think that we're transitioning into a brand new system and that these transitions like the 70s are not easy for most people. What are your thoughts? Will we end up in a confiscation more overt? Because price manipulation is a confiscation, taxation, inflation, all of that is a form of confiscation.
Uh, the most honest answer is I don't know.
Mm.
Uh, the more nuanced answer is that if politicians steal from you and I overtly, there are costs to them. Uh,
Really?
yeah, I think
I'm
there are.
sorry, Rick. I haven't seen too many of those costs, but go
Well,
ahead.
there are prospective costs.
Yeah.
If they came and said, "We are only gonna let your IRA invest in government securities," I think they would become acquainted with the fact that there were 400 million guns in private circulation in the US. If they came to steal your gold again, I think there would be real political costs. If, however, they persist with deficit spending, if they persist with inflation, if they persist with artificially low interest rates, which subsidize spenders at the expense of savers, there are more spenders than savers in society, and they
Mhm.
get rewarded for that same material.
Mhm.
Uh, they get rewarded for those policies of wholesale theft, and they
Mhm.
get punished for retail theft. If you assume that people seek rewards and they minimize risk, then Congress people, understanding that they're extremely popular and they get reelected, if they inflate, if they spend, if they steal from one small set of constituents called savers
Mhm.
to benefit a very large constituent called spenders, they do well. And it seems to me that the course of least resistance until it doesn't work anymore is the status quo.